Silver and gold spot prices got smashed again this week. If, like me, you've been in the precious metals market long enough, perhaps you too are beginning to feel like Phil Connors in the 1993 American fantasy comedy film Groundhog Day, where a cynical television weatherman covering the annual Groundhog Day event in Punxsutawney, Pennsylvania, becomes trapped in a time loop, forcing him to relive the same February 2nd day repeatedly. Gallows humor and derivative price discovery propaganda aside, for those of you like me who know this kind of rampant fiat currency creation ultimately blows physical precious metal values higher over the medium and longer term, now's a great moment to be adding to prudent bullion and precious metals positions. This past week on this same SD Bullion channel, I published a video looking back at the last dozen years of intraday silver price trading action on a year-by-year basis. It was a study attempting to find the typical times during the day in which short precious metals derivative traders had their generally largest downside effects on ongoing spot prices for silver and gold. This week's downside price smashing in the morning hours were like clockwork. I'll leave a link in the show notes and comments below if you missed that video. Hello there, on behalf of SDBullion.com, this is James Anderson. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
You know the drill. SD Bullion is giving away a box of 500 new 2021 Silver Eagles that could have your name written all over it. But if you don't enter, it could go to someone like Silver Steve here. And while we like Silver Steve, he really doesn't like to share. So click the link below for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win. This is a look at the silver spot, gold spot price, and gold-silver ratio over the last week of trading. The intra-week spike in gold and silver got immediately met with outsized derivative trading to the downside, and for the last 3 trading days were attacked in the morning hours as mentioned. Here are these same charts looking at the last 3 months of time. We are certainly in the summer doldrums for precious metals at the moment. It'll be important to see how trading goes Sunday evening into early next week. Will the precious metals rebound, or will there be further short-term downsides to come? Not only in silver at the moment is there an important support level, but so too in gold and platinum, and how much higher might the gold-silver ratio climb in the coming weeks? To put today's price smash in excused context, the U.S. jobs report came in about 100,000 hires higher than expected. Here's a look at the booming job hires over the last month. This job data and recent fiat Federal Reserve note strength versus other major fiat currencies doesn't convince me that economic boom times are near. China is beginning to withdraw physical gold bullion at a clip last seen prior to the pandemic pre-2020. In terms of their silver bullion withdrawals, the numbers appear to be also growing. Reports out of India also reflect increasing demand for physical gold bullion as India imported 74 tons of gold in July, roughly 4.2 billion worth of gold bullion buying. Silver and gold Krugerrand bullion coin buying is reported to be hitting 30-year high levels in terms of global demand. And anecdotally, this fact jives with increasingly high Perth Mint bullion coin demand over the last 2 years. In some positive, there appears to still be a shred to the rule of law remaining. This past week, a jury convicted 2 former Wall Street bank traders of wire fraud. A federal jury convicted 2 men for engaging in multi-year fraud scheme to manipulate U.S. commodities markets for publicly traded precious metals futures contracts. According to court documents and evidence presented at trial, Edward Basis, 59, of New Canaan, Connecticut, a former senior trader employed at Deutsche Bank and Bank of America in New York, and John Pacillo, 57, of New York, a former senior trader employed at Bank of America and Morgan Stanley in New York, fraudulently pushed precious metals prices up or down by routinely placing large spoof orders in the precious metals futures markets that they did not intend to fill. Basis and Pacillo did so in order to manipulate prices for their own gain and the bank's gain, and to defraud other traders on the Commodity Exchange, COMEX, and New York Mercantile Exchange, the NYMEX, both of which are exchanges run by the CME Group. Court documents and witness testimony also showed that Basis and Pacillo taught their other traders how to engage in the practice of spoofing, which involves placing orders on the exchange that at the time were not intended to be executed. For example, electronic chat messages introduced as evidence during trial demonstrated that while he was placing deceptive trades, Basis stated, quote, "That does show you how easy it is to manipulate it sometimes. I know how to game this stuff." Evidence introduced at trial also included electronic messages from Pacillo stating, quote, "I just put in 500 lots to spoof the gold, and if you spoof this, it really moves." Basis was convicted of conspiracy to commit wire fraud affecting a financial institution and wire fraud affecting a financial institution. Pacillo was convicted of conspiracy to commit wire fraud affecting a financial institution, wire fraud affecting a financial institution, and commodities fraud. Conspiracy to commit wire fraud and wire fraud affecting a financial institution carry a maximum sentence of 30 years imprisonment per count. Commodities fraud carries a maximum sentence of 25 years imprisonment. A federal district court judge will determine any sentence after considering the U.S. sentencing guidelines and other statutory factors. And one of the embarrassing retail frauds that ran for years in the retail precious metals market has come to a prosecuted guilty verdict. Former president and CEO of now bankrupt precious metals firm convicted of mail-in wire fraud for Ponzi-type scheme, defrauded more than 2,500 customers of 25 million fiat Fed notes. The former president and CEO of Northwest Territorial Mint, a now bankrupt company dealing in precious metals, was convicted today in U.S. District Court in Seattle of 14 federal felonies resulting from a Ponzi-like scheme that defrauded customers of millions of dollars, announcing acting U.S. Attorney Tessa M. Gorman. After more than 3 weeks of testimony and evidence, the jury deliberated about 2 days before convicting Bernard Ross Hansen, 60, aka Ross B. Hansen, of multiple counts of wire and mail fraud. The jury also convicted vault manager Diane Renee Erdman, 48, of 13 counts of wire fraud and mail fraud following the trial. Sentencing for both Mr. Hansen and Miss Erdman is scheduled for October 29, 2021. According to records in the case and testimony at trial, Hansen and Erdman defrauded Northwest Territorial Mint customers in a variety of ways. The evidence at trial showed that Hansen and Erdman lied about shipping times for bullion, used customer money to expand the business to other states, and used customer money to pay their own personal expenses. In this way, the company lacked enough assets to fulfill customer orders and used new customer money to pay off older customers in a Ponzi-like scheme. In total, over 2,500 customers paid for orders or made bullion sales or exchanges that were either never fulfilled or never refunded. The total loss to these customers was more than $25 million. In early 2008, I personally made the mistake of doing a small bit of business with Northwest Territorial Mint, and after 5 months of cajoling, I was finally delivered the 100-ounce silver bar I originally ordered. It's terrible experiences such as this that we made the free SD Bullion guide and have posted articles on SD Bullion blog explaining to new investors best due diligence practices when choosing trusted bullion dealers. You can get our free SD Bullion guide below by clicking the link in the show notes. And finally, to close this week's SD Bullion market update, I'll leave a click-through link in the comments and show notes below of a recent interview with our founder and CEO, Tyler Wall. He spoke with the Yankee Stacking channel this past week. If you want to learn more about SD Bullion and its founding principles, click through for that insightful interview. That's all for this week. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.